We are live in 2 minutes. Are you ready? Are you ready? All right. Are you guys ready? Welcome back to the Crypto Report, everybody. I'm Crypto Kip, and today, guys, we are live streaming on X. We are live streaming on YouTube, and we are going to pop up that banner right there. And welcome back to the Crypto Report, everybody. I am Crypto Kip, and guys, moving forward, we are fully going to start embracing X. And so if you're watching us on X right now, obviously, X is the new thing, guys. So smash the heart, right? Retweet this stream out because we are going to be live streaming the press briefing from the press meeting from the Fed Chair Jerome Powell today, and listening to his comments live and taking questions, looking at the charts, because it is very much so anticipated that we could see a absolutely massive rally to the upside for Bitcoin, crypto, your favorite altcoins out there, if we get this Fed rate cut. And there's a 99% chance that we do, but how big can it be? How big can it actually be? That's the big question today, and I think it could be quite big. So, I think we're going to get a nice little move today. I want to look at some of the stories before we get in to this crazy news for the day, because there's a lot going on. And so just quick shout out to everybody in the comments section. If you're just following us on Twitter, go ahead and, give us a follow and check it out. We're going to keep going here. How's the volume levels and everything? I'm using a streaming program I haven't used in a while, so I want to make sure it's working. Give me some feedback in the comments. How we doing, guys? How we doing? How you feeling today as well? I want to know that. So go ahead and drop that in the comments for me as well. And let me go ahead and do the old screen share and show you exactly what's going on. Boom, share the screen. Can you see the screen okay? You should probably be able to see the screen okay. I think we're good to go. Eddie J Funds with a super chat. Shout out to Eddie J Funds with that $5 super chat. If you guys get up to 10 super chats with $5 a piece, I'll stick around for an extra 30 minutes. And boom, Carlito Figueroa has just announced, yes, the Fed rates have actually officially been cut. So that is spectacular. And you know what, guys? With that, we're getting some volatility. So that news must have just come out here just a minute ago. Usually they release that news right before the actual FOMC meeting. And then the press conference from him. So press conference, that's the word. And here we go. We've got it pulled up. I'm ready to watch it, guys. We are ready to go here. We just got to get this thing happening. So looking forward to that. We will have this thing playing live for you guys. We are just waiting on that to go live. So can you get, well, you probably can't hear that audio, but I know that I know how to get the audio working. Okay. So let's get through some of this, some of the stories for the day. Shout out to C Hicks as well for a super chat. My name in the chat is also not my name. That's his name, is saying Crow at 9.2 cents. That's beautiful. That's spectacular. Thanks for the feedback. We got some people that like Crow with knife in the chat. I know. We like the Cronos memes here on this channel too. And then shout out to Oscar Ramos. He's live as well. So thanks for joining us today. I know a lot of people like to go live on these days. And so a lot of competition for, eyes and ears. But at the end of the day, we're all saying, what we can about crypto. So all love in the world to every influencer out there doing it. But you know what? Today, I just wanted to go live myself and have some fun and watch these charts with anybody who wants to hang out and watch them with us here. So we'll come keep an eye on these charts. Let's just see on the 15-minute candles what we've got going on. Not a lot of volatility. So let me just jump back over really quick. And I want to take a peek at this. And so we'll look at the FOMC there. Let's look at the Fed rate cut. Boom. See what we got going on. We've got live updates from the New York Times. We kind of like that. So let's actually just take a peek at this and get an idea of what we're looking at here. So, a lot about obviously the election here, but we have been coming down in terms of the rates. Inflation has been getting slightly better, which is good. Federal Reserve officials cut interest rates on Thursday. This is official. It's a 0.25% rate cut, which is right within expectations, guys. There was a 99% chance of this happening. So anybody who's shocked today, well, you shouldn't be. We were all kind of anticipating this. And Tony Mountain with a $10 super chat. I appreciate you, Tony. It looks like you guys want me to stick around for an extra 30 minutes today. If we get to 10 super chats, I will do that. I'll stick around a little bit longer today. So I appreciate you guys. There's super chats on YouTube. If you're watching on Twitter, I guess don't worry about it. But go ahead and retweet the stream and let's get some more folks in here watching because we're just waiting on the Fed to go live officially. So we're going to keep an eye on this to see when they go live. But it should be right now it's 1:09 Central Standard Time. And then in 20 minutes or so, we're actually going to get the Fed live. So before we do that, obviously, let's look at some of the charts and just see kind of what the temperature in the room today is. It's pretty zesty. If you haven't noticed, the temperature in the room is pretty zesty. It feels pretty good. And so you should feel pretty nice right now because Bitcoin, $76,000 Bitcoin. Shout out to Tony Mountain. I appreciate you. Thank you for that compliment, my friend, and your super chat. Solana is knocking on the door to $200 right at the FOMC meeting. It's so crazy to think, and this is something that I've been saying on YouTube for a while, as much as we have been bullish on crypto on this channel, and let's be very clear here. We've been very bullish for the last 3 years on this channel. We've had a YouTube channel for 3 years. We're going to continue. Now we're going to start posting all this content on X as well. We're going to double up. We're going to be doing YouTube and X, so you can watch us either way. I recommend you watch on YouTube. That honestly, at this point, I like when people watch on YouTube more, but some people are only on X. So we're going to be streaming for all parties. But one thing we've been saying for 3 years is that crypto was going to get political. That's exactly what happened here. We said that the institutions were going to FOMO into crypto. That's exactly what's been happening here. And then, one thing that we should have been able to predict, but nobody really did, was when the election results were kind of pending, right? On the day of the election, I guess we should have been able to anticipate like that would be the moment where Bitcoin was going to be breaking through the highs. I really didn't see a lot of people predicting that on election day is where Bitcoin is going to be right at the precipice of new all-time highs, right at the precipice of price discovery mode. And it was almost like that was extremely predictable. But honestly, like I don't know why I didn't have the foresight to come out and say, like, obviously that's going to be the case, because obviously, like, that makes all the sense in the world. What the craziest part about it is Bitcoin was rallying before the election results were even complete. That was what was mind blowing to me. And like, honestly, you could almost look at the price of Bitcoin and know what the outcome of the election was going to be, which was just so wild to me. That was so wild, but also it made all the sense in the world. So again, Bitcoin's doing great. It's up 8% over the last 7 days. You've got Ethereum up 14%. One thing that I know a lot of us have been watching is Bitcoin dominance, which may have officially topped out. Maybe. Now, why is this a good thing? Why am I happy about this? Because if you're holding altcoins, and I know if you're on crypto Twitter right now and you're watching this, yes, you're probably holding some altcoins. We got a lot of degenerates out there. I'm one of them. We're all crypto degenerates. And that's a compliment, guys, because we like to be crypto Web3 degens. And smash the like button if you agree with me there. I'm a degen at heart. It's great. It's beautiful. It's wonderful. I'm a dad. I'm a degen. It's great. Right now, looking at the Bitcoin dominance, why am I smiling about this? Because as Bitcoin dominance comes down, that's fine as long as we continue to see this. And what is this? This is the total market cap of crypto. This is something that I've been preaching about on our channel for a very, very, very long time. Is Bitcoin back in let's go over to the weeklies. Bitcoin. Oh, wait. That is Bitcoin dominance. Oh, come on, Kip. Get it together. And boom, we got Celebrity Troll in the chat with a gifted Crypto Report membership. By the way, if you guys want to become a member on our YouTube channel, you can do so. You get access to our private Discord. So check that out if you haven't done so already. I'm going to zoom out here on the Bitcoin chart because I want to talk about total market cap, but I got to show you something for Bitcoin. This is the 2021 highs. This is something I've been preaching about for Bitcoin, and we surpassed that in March. What we didn't see, however, was the total market cap for crypto surpass our previous highs from November of 2021. And so what that tells us is it all makes sense because Bitcoin dominance is climbing up. That means Bitcoin generally has been outperforming most altcoins. There are exceptions out there, Solana being one. But you can also look at Ethereum and realize that Ethereum has really been struggling in its dominance versus Bitcoin. This is the Ethereum versus Bitcoin chart. And this shouldn't be a secret to all you guys. But the biggest thing that I'm most excited about right now is the Fed cutting rates means that there's more of a game on kind of mentality for risk on assets. And congratulations, Carlito Figueroa, who once again is a member on the channel because that gifted Crypto Report membership. So shout out to you. But I think Bitcoin dominance, Nasir says, hoping Bitcoin dominance tops out next month. And I'm not, the only one that feels the same. Nasir and we agree because I think, Nasir, we might have seen it. It's too early to say that this is Bitcoin dominance topping out. Okay. But Ethereum is certainly starting to rally. When you look over at CoinMarketCap, Ethereum being up 14% over last days versus Bitcoin being up 8% and Solana being up 15%. We're looking like we're having that altcoin rally, and we've had a lot of coins that have been pumping. So just look at the last 24 hours and you see Nero making crazy gains. You got an Ethereum protocol maker making crazy gains. Godius Maximus, which is this AI meme that took the internet by storm. This one's going wild. We got Radium on Solana going wild. We got Ethna. We got Pepe's finally making the moves. Pepe coin. That is excellent to see. If you like Pepe, do me a favor, smash a like. We do like Pepe here. I think that Pepe is kind of the meme that it's kind of the chosen one is what we've been saying on this channel. And I think it's going to take a new high at some point. And then there's other ones that people are really bullish on, like Bread on Base Chain and all these other chains. So but we got a lot of coins pumping up today, and Bitcoin dominance is slipping. And then shout out to the Crow fam. Cronos is up 25% over the last 7 days. Actually, let's take a peek at this over the last 7 days. Cronos is in the top 10, top 15 gainers, which is spectacular, probably because crypto.com just came out with some new ideas for 2025. They're going to launch a US exchange. These are all exciting things. So Johnny Sevenfold says Stacks is lagging. Stacks coin is lagging right now, but it's kind of tied to Bitcoin. So we're going to want to see Bitcoin really I think after this FOMC meeting, Stacks can start ripping and roaring again. Bitcoin dominance topping out does not mean that Stacks is not going to perform well. I don't think. I'm very bullish on Stacks personally. Stacks, for all you guys that don't know, is a layer 2 solution on Bitcoin. It's Bitcoin DeFi enabled. I've been very bullish on this on our channel. So is Black Sea. Very, very excited about that. And so, we're looking forward to this altcoin explosion. We've got the Fear and Greed Index at 70 today, which is relatively greedy, but not as greedy as we see it get. It in a true parabolic bull market rally, we get into the extreme greed phase, and we're not there yet. But I did want to take a peek at this really quickly and just kind of peek at some of the data. So today, what do we got going on in terms of liquidations? And I want to show you guys, we are having more shorts squeezed than longs. What does that mean? That means that the bears are getting wrecked, simply. And now if you're a bull, in other words, if you're holding a bunch of cryptocurrency, whether it's an altcoin or Bitcoin, you want the shorts to get wrecked. Not if you're a short trader, but if you're a short trader, then you're not a bull, you're a bear. And the bears are getting wrecked. People that are betting on Bitcoin to go down right now are getting squashed because the Fed is cutting rates. We have a pro-crypto candidate that was just elected president of the United States of America. And we are getting shorts squeezed out, which means those positions get closed. That triggers buys and the price of Bitcoin goes up. It's very simple. So we want to continue to see that trend if you want to see Bitcoin goes up. You guys want to trade, by the way, this volatility in the crypto market, the FOMC meetings days are crazy days to be trading. But if you see something obvious for yourself here on the charts and you want to be trading because you think we're in price discovery mode, you can sign up for Blowfin. I've got it pinned in the link on my YouTube channel. And then you've also got it should be, I think it's pinned in this chat too. If not, I'll pin it to Twitter later. But Sign up for Blowfin if you haven't done so and you want to take advantage of sign-up bonuses that you haven't yet done yet. No KYC required. And this is the time for some crazy trades. We're looking forward to a lot of moves here. You got some memes that are rallying. You got a lot of crazy stuff going on here in the crypto space. We're feeling pretty good right now. We're feeling pretty darn good right now. So these liquidations to the shorts, it's good for the longs. It's good for the longs, and it's good for the DCAers and hodlers out there, which is personally what we like to do. And Marlon PB Cheetah says, if someone wants a chance at a free membership, you got to go to Crypto Report and opt in. There you go. There you go. So Marlon PB Cheetah says, subscribe to the channel and maybe he'll be gifting out some memberships to the channel. I guess that's pretty cool. That's pretty cool. We do have 3 super chats out of the 10 needed for me to go an extra 30 minutes today, but I will be sticking around for the entire FOMC meeting, which again is going to start here in just a short 12 minutes. We're going to have the Fed kind of going live here. So we'll keep an eye on this. We'll keep an eye on this. What else we got going on today? I do want to look at some of the other data. We'll look at the Bitcoin percentage returns really quickly, just to kind of give those you guys a refresher where we're at. Historically speaking, November is more bullish than October. September is historically bearish. We had a green September, probably because of the Fed rate cuts, probably because of the anticipation of this presidential election. One of the most consequential presidential elections in the history of cryptocurrency, to be honest with you guys. And now one pro-crypto party just won, at least I think they won the Senate definitively, and the presidency. I think the House is still in limbo. If anybody has news on that, let me know. Eddie J Funds with a second super chat asking, are you going to Bitcoin 2025 in Vegas? Ooh, buying the tickets really soon. Hope to see you there. Maybe I will, Eddie. Maybe I will. I'll have to look into that one with Black Sea. I do just have a little baby that came. I'm a dad now, and so I got that responsibility, and so it might be tough for me to get there, but I'd like to. That would be a lot of fun. I went to the Bitcoin conference in Nashville. That was crazy. That was wild. That was a lot of fun. I got to meet George. I got to meet Anthony Pompliano. That was super cool. I got some photos with them. I was like 2 feet away from BitBoy and Altcoin Daily and AJ Rice Crypto and all those guys. I didn't bother them at all. I just, we're kind of doing our own thing. But I like directly bumped into George. So, and George is one of my favorites personally because he's kind of a permabull, and so am I, because at the end of the day, the permabulls are correct. And shout out to Carlito Figueroa. Now we got 5 super chats. Carlito Figueroa is like, let's let this parabolic rally begin. And you know what, Carlito, I think it's time, because again, what we're looking at here is the history of Bitcoin and crypto. September is typically bearish. It was bullish because of the Fed rate cuts, because of the anticipation for this presidential election. Now we've got October here, which historically presents 21% gains. We've got 10% gains, which is pretty good. And now November, historically, we see 43% gains. We're already up 8%. This FOMC meeting could be the catalyst for a bigger move to the upside. Now, I will say this. We are getting this Fed rate cut that just happened. It's spectacular. This is already done. If you look towards December and you want to get an idea of what's coming on in December, right now, actually, hold up. Give me a second, because this is not updated. So the current is 475 to 500. And then, boom, 475 to 500. Okay. Then, so now we're already down to 450 to 475. There's a 63% chance. So what we're seeing here is then now there's a 63% chance that we're going to get another Fed rate cut in December. Do you agree? Do you disagree with that? It's hard to say exactly what's going to happen with that. But I do believe that we need more Fed rate cuts. I recently did a refi on my house, and I saved about $150 a month for my personal, mortgage that I've got on my house here. And, that was great, but I want the rates to come lower. And I did it because they didn't charge me any fees for my refi. You can actually get refinancing your house costs a lot to do sometimes, but I actually got a really good deal. They had some incentives. They wanted to lock in some people at lower rates. And I think suspiciously because they believed that the rates were going to go lower, and then, maybe you wouldn't want to refi again. I don't know. I got a bunch of theories on that, but we're looking at a potential. Well, so we just got the rate cut now, December. So now December 18th, and it's like just over a month away. I mean, these two meetings are pretty close together. Then you got January as well. We got kind of November, December, January. There's a chance that we keep getting more rate cuts. January, is there a chance of a rate cut right now? Yeah, there's even another chance, a 28% chance that we get another. So we could potentially be seeing 25 basis point rate cuts, 0.25% rate cuts. We just saw one. Maybe we have 2 more coming up. And we're coming up into the most bullish month for crypto in the history of this asset. So you should feel pretty darn good. Some people are asking me, why is Mystery Mary Coin pumping today? We talk actually a lot about Cronos on this channel. I'm just going to peek at this really quickly. There's some rumors about some exchange listings on there that I've been looking forward to. I'm a big holder of this coin, so there is bias there. I want to make you guys aware of it. But yeah, it's getting a pump because there's rumors of an exchange listing coming out. It's back to this is the number one trending meme coin on Cronos right now. It's getting a pretty decent pump right now, so we'll see. But just everything's pumping. You're wondering why that's pumping. Well, Cronos is up 25% over the last 7 days. And so in general, when the native token for a blockchain is pumping, the tokens within that ecosystem should be pumping too, which is why you see, Radium pumping today. Why is Radium pumping? Because Solana is up big time. Solana's almost back at $200. And so Radium is a protocol on Solana. Of course, Radium's pumping today. And is Jupiter getting a pump today? How do you like that? How do you like that falsetto? Is that good? Hold up. Let's look at Jupiter really quick because that's a huge one. $1.05 getting a little bit of a pump. I'm surprised that this one's not pumping more. I think that Jupiter is probably set for a massive explosion at some point here. I think it's just going to absolutely shatter through some levels, but Radium is just doing killer moves right now. Absolutely killer moves right now. Pretty cool to see. Ryan Drysdale says, my summer night shifts have ended so I can finally watch your live streams again. Perfect. Hopefully, Ryan, and hopefully all you guys, hopefully we make enough money here where you could just quit your jobs and just be a Web3 degen. You know what I mean? Like, is that the dream? I don't know. Give me some thoughts in the comments down below. Daniel Gunez says, hello, will you sell your altcoins when we reach extreme greed? I will be taking profits when the extreme greed, because that's when you take profits, but I won't be scaling completely. I'll be scaling out of the market, but I will not take a complete exit, because the reality is when Bitcoin gets a parabolic blow off top, my friend, and these are great questions, guys, keep them coming. I love the participation on this live stream today. You guys are active. I love it. Taking a peek at some of the charts. Let's just go over this and kind of answer your question a little bit more. First up, we'll go into the crypto and fear and greed index. I want to remind you guys that in the 2021 highs, okay, the fear and greed index, like, look at how long, guys, November, December, this thing was up there for like 3-4 months. And then this is kind of when it happens, right? October, November, December. This is when we go into those extreme fear levels. And the fear and greed index, this is what this blue is, to the 80s, to the 90s right now. We're saying we're at 77. And so we could stay up here for months on end. And yes, you should be scaling out. But here's the other thing to consider. When you look at like the stock to flow model, and you see where we're hypothetically at, we're currently making this move. We're currently making this move. We're currently making this move, this orange into, bright orange into yellow, into really bright yellow into the green, which is kind of the peaks of these bull markets. So this is where we're getting, if we're in the yellow up here, and we're in the 90s in fear and greed, yes, we should be scaling out some profits. And hopefully, you've had plenty of time to make a excellent position in this crypto asset class, because again, we've been doing videos for 3 years. We've been in a bear market and we are now in the bull market, and things are looking very, very beautiful right now. Very spectacular, very, very beautiful. So you should feel pretty darn good about that, guys. You should feel pretty darn good about that indeed. I'm gonna mess with these. Look at this. We can move my box around here. I love this tool. The only problem with this tool is I don't have my beats. I got my beat vibes. I like the. Are you guys missing the music, or is this okay? Do we miss the music? Do we need the music? If so, I've got some ideas of how we can get some music. It's really complicated on the streaming platform for some reason. I can't really get the music going. But again, and so people are asking, when we get to extreme greed, should we be taking profit? Yeah, you should be scaling out of your positions, especially your riskier positions if they're doing well. Always good to take some profit. But I want to remind you guys of some of these key charts that, we always like to take a peek at, which is like the Bitcoin rainbow chart, the stock to flow model. There's so many indicators saying that we are going much, 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 much higher. And so I feel pretty good about that. And Mr. Chor in the chat is asking about a Crow ETF. They're talking about some kind of Cronos ETF. I don't exactly know what it's going to mean, but the biggest thing here is this Fed rate cut that just happened. So that's looking pretty good. I'm going to also show you this really quickly, which is kind of crazy. You do have multiple analysts that are expecting $100,000 Bitcoin before the next president is inaugurated. So that is something to keep an eye on. We are pretty excited about that as well. You know what? Matter of fact, I could probably, let me go ahead and I can show you. I'll show you this clip really quickly. Let's let's show you the clip really quickly, and I will go ahead and do that. Give me 1 sec. Let's share the screen. Let's share this right here. Share that. And let me know if you can hear this audio. Okay, go ahead right now.
To get to every asset class that is rallying hard today, Bitcoin certainly among them. Take a look, almost 75,000. As investors are betting on a friendlier environment for that industry under a second Trump administration. Mackenzie Sigalos is following that story for us. Mackenzie.
Hey, Scott. Bitcoin briefly surging to a new record high as investors bet that Donald Trump will deliver on his pro-crypto promises, especially with a Republican-controlled Senate behind him and after getting more than $25 million from crypto donors. Now, Trump's main pledge is to fire SEC Chair Gary Gensler, who's brought more than 100.
That's huge, guys. That is huge. And this is the biggest piece of this. Losing Gary Gensler. That would be very, very great. You would like to see that. You would really like to see that because he's at an anti-crypto crusade, as I'm sure you guys are aware of. But let's continue.
Enforcement actions against industry leaders like Coinbase and Robinhood. Those stocks are pumping 25% and 17% respectively today, with Robinhood on pace for its best day in over 2 years. Bitcoin miners are also getting a boost this morning, with Trump having promised on the campaign trail that all future Bitcoin will be mined in the U.S. Marathon, Riot, and Bit Digital are all trading up more than 14% and driving small caps higher as well. Now, in terms of the market outlook,
guys, look at the gains in the stock. Anything crypto related blowing up.
Multiple analysts are expecting Bitcoin will hit $100,000 before Trump's inauguration, especially if he delivers on promises like launching a strategic national crypto stockpile with the $15 billion worth of Bitcoin that it already has on its books from asset seizures. And Scott, Bitcoin now up 68% year to date after briefly hitting that new all-time high overnight.
Wowee. I mean, wow. Bum. Wow. Walking the walk, talking Christopher Walken. This is unbelievable, guys. This is happening. So, and yeah, I mean, you've seen this guy come out with comments and say, let's get this guy. Oh, you know what? I don't even have the thing pulled up there. Let's get this guy out of office. Let's get this guy fired. Now, I'm going to jump in because I think it's time. We got to get into this. Boom, right here. Let's share it. We are going live here. We've got the Fed meeting coming in moments. Give me a thumbs up, smash a like, go ahead and let me know. I got to make sure you guys can hear this okay. This is big. This is the time. He's live any second here. Any second here. All right. Here we go. Let me know. Can you hear it? Good tunes. Look at that. All right. So now we're just waiting here. Any minute now, we are going to have the Fed come up and get on this stage and tell us what's the word. What is the language this man's going to use? Let's hear. Let's listen up. Can you guys hear? Let me know in the comments, please.
Good afternoon. My colleagues and I remain squarely focused on achieving our dual mandate goals of maximum employment and stable prices for the benefit of the American people. The economy is strong overall and has made significant progress toward our goals over the past 2 years. The labor market has cooled from its formerly overheated state and remains solid. Inflation has eased substantially from a peak of 7% to 2.1% as of September. We are committed to maintaining our economy's strength by supporting maximum employment and returning inflation to our 2% goal. Today, the FOMC decided to take another step in reducing the degree of policy restraint by lowering our policy interest rate by 0.25 percentage point. We continue to be confident that with an appropriate recalibration of our policy stance, strength in the economy and the labor market can be maintained, with inflation moving sustainably down to 2%. We also decided to continue to reduce our securities holdings. I'll have more to say about monetary policy after briefly reviewing economic developments. Recent indicators suggest that economic activity has continued to expand at a solid pace. GDP rose at an annual rate of 2.8% in the third quarter, about the same pace as in the second quarter. Growth of consumer spending has remained resilient, and investment in equipment and intangibles has strengthened. In contrast, activity in the housing sector has been weak. Overall, improving supply conditions have supported the strong performance of the U.S. economy over the past year. In the labor market, conditions remain solid. Payroll job gains have slowed from earlier in the year, averaging 104,000 per month over the past 3 months. This figure would have been somewhat higher were it not for the effects of labor strikes and hurricanes on employment in October. Regarding the hurricanes, let me extend our sympathies to all the families, businesses, and communities who have been harmed by these devastating storms. The unemployment rate is notably higher than it was a year ago, but it has edged down over the past 3 months and remains low at 4.1% in October. Nominal wage growth has eased over the past year, and the jobs to workers gap has narrowed. Overall, a broad set of indicators suggests that conditions in the labor market are now less tight than just before the pandemic in 2019. The labor market is not a source of significant inflationary pressures. Inflation has eased significantly over the past 2 years. Total PCE prices rose 2.1% over the 12 months ending in September, excluding the volatile food and energy categories. Core PCE prices rose 2.7%. Overall, inflation has moved much closer to our 2% longer run goal, but core inflation remains somewhat elevated. Longer term inflation expectations appear to remain well anchored. Markets. Our monetary policy actions are guided by our dual mandate to promote maximum employment and stable prices for the American people. We see the risks to achieving our employment and inflation goals as being roughly in balance, and we're attentive to the risks to both sides of our mandate. At today's meeting, the committee decided to lower the target range for the federal funds rate by a 1/4 percentage point to 4.5% to 4.75%. This further recalibration of our policy stance will help maintain the strength of the economy and the labor market, and will continue to enable further progress on inflation as we move toward a more neutral stance over time. We know that reducing policy restraint too quickly could hinder progress on inflation. At the same time, reducing policy restraint too slowly could unduly weaken economic activity and employment. In considering additional adjustments to the target range for the federal funds rate, the committee will carefully assess incoming data, the evolving outlook, and the balance of risks. We are not on any preset course. We will continue to make our decisions meeting by meeting. As the economy evolves, monetary policy will adjust in order to best promote our maximum employment and price stability goals. If the economy remains strong and inflation is not sustainably moving toward 2%, we can dial back policy restraint more slowly. If the labor market were to weaken unexpectedly, or inflation were to fall more quickly than anticipated, we can move more quickly. Policy is well positioned to deal with the risks and uncertainties that we face in pursuing both sides of our dual mandate. The Fed has been assigned 2 goals for monetary policy. We remain committed to supporting maximum employment, bringing inflation sustainably to our 2% goal, and keeping longer-term inflation expectations well anchored. Our success in delivering on these goals matters to all Americans. We understand that our actions affect communities. We at the Fed will do everything we can to achieve our maximum. Thank you. I look forward to our discussion.
Time for the big show. The questions tend to move the markets.
Thank you. Given the expectation that the election outcome would meaningfully impact the U.S. economy next year, how is the committee taking these proposals into account for upcoming decisions, including potentially the next one in December? And can you give us any more sense of how proactive or the Fed is prepared to be to changes in economic policies with the next administration?
Policy decisions. As you know, many things affect the economy, and anyone who writes down forecasts in their job will tell you that the economy is sense of any policy changes will be. We therefore don't know what the effects on the economy would be. Whether and to what extent those policies would matter for the achievement of our goal variables, maximum employment and price stability. We don't guess, we don't speculate, and we don't assume. Now, just in principle, it's possible that any administration's policies or policies put in place by Congress could have economic effects that over time that would matter for our pursuit of our dual mandate goals. So we, along with countless other factors, forecasts of those economic effects could have economic effects that over time that would matter for our pursuit of our dual mandate goals. So we, along with countless other factors, forecasts of those economic effects would be included in our models of the economy and would be taken into account through that channel.
Nick.
Chair Powell, Nick Timros from the Wall Street Journal. Roughly 1 year ago, when the 10-year Treasury was flirting with 5% and 30-year mortgage rates were near 8%, you noted how higher borrowing costs, if they were sustained, could weigh on economic activity. Given that you've said you believe policy is restrictive and the Fed is now dialing back that restriction, are the growth risks presented by higher U.S. Treasury yields today any different from those you identified 1 year ago when inflation was still meaningfully above your target?
So I would just say this: we've watched the run up in bond rates, and it's nowhere near where it was, of course, a year ago. I guess the long run rates are well below that level. So we're watching that. Things have been moving. It's too early to really say where they settle. Ultimately, I'm sure we've all read these decompositions of what, and I certainly have, but it's not really our job to provide our specific decomposition. I will say, though, that it appears that the moves are not principally about higher inflation expectations. They're really about a sense of more likelihood of stronger growth and perhaps less in the way of downside risks. So that's what they're about. We do take financial conditions into account if they're persistent and if they're material. Then we'll certainly take them into account in our policy. But I would say we're not at that stage right now. It's just something that we're watching. And again, these things don't really have mainly to do with Fed policy, but to do with other factors in the economy.
If I could follow up, is the September SEP, are those rate projections still valid? Do they still seem relevant given where we are now? You get halfway through the cycle between the last set and the next set. I wouldn't want to comment one way or the other. Let's talk about the data we've gotten since the last meeting. So in the main, the economic activity data have been stronger than expected. The NIPA revision was stronger. Certainly the September employment report was stronger. The October report, not stronger. Retail sales stronger. So overall, though, I think you take away a sense of some of the downside risks to economic activity having been diminished with the NIPA revisions in particular. And so overall feeling good about economic activity. So I think we would factor that in. At the same time, we got one inflation report, which it wasn't terrible, but it was a little higher than expected. So I think really the question is December, and by December we'll have more data. I guess one more employment report, two more inflation reports, and lots of other data, and we'll make a decision as we get to December.
Gina Smilik from the New York Times. Thanks for taking our question, Chair Powell. When it comes to December, what will you be looking at specifically as you try to make that decision? And then as of the Fed's economic projections in September, you had written down 4 quarter-point interest rate cuts in 2025. Do you still think that those are likely? Is that sort of the baseline outlook at this point, or has that shifted? And if it shifted at all, can you give a little bit of detail as to why?
we don't fill out an SEP, and I can't characterize one that wasn't filled out today. So I can't really speak for kind of exactly where the committee is. I will just say for December, we're going to be, again, at every meeting, we're going to be looking at the incoming data and how that affects the outlook. As you know, we're in the process of recalibrating from a fairly restrictive level at 5.33%. After today's move, we're down 75 basis points. And we're asking ourselves, is that where we need to be? You know that we're trying to steer between the risk of moving too quickly and perhaps undermining our progress on inflation, or moving too slowly and allowing the labor market to weaken too much. We're trying to be on a middle path where we can maintain the strength in the labor market while also enabling further progress on inflation. We think that's where we are, but that's the question we're going to be asking in September and in other meetings. And again, I can't really update you on the committee's thinking because we don't fill out an SEP at this meeting.
Yeah, totally appreciate that. I guess when it comes to your own thinking, do you think that a full percentage point of rate cuts in 2025 is a reasonable outlook?
Again, we're going to wait and see how things come in December. I mean, it's just, I would put it this way. We're on a path to a more neutral stance. And that's very much what we're on. That has not changed at all since September. We're just going to have to see where the data lead us. We have, a whole 6 weeks of data. We're just going to have to see where the data lead us. We have, a whole 6 weeks of data to look at to make that decision in December. Obviously, I'm not ruling it out or in, but I would say, I would say that. Again, we didn't update the SEP, so I'm not going to characterize, where the committee would be.
Howard.
Thanks, Howard Schneider with Reuters. I wondered if you could please elaborate, explain a little bit the two changes in the language of the statement here. In the first paragraph, when you say inflation has made progress, dropping the word further progress. And in the second paragraph, dropping the sentence that the committee had gained greater confidence that inflation was progressing towards its 2% goal. Is there any policy substance behind either of those changes in language? Is it meant to open the door to a December pause? Is it meant to communicate anything about the stickiness of core inflation in the last 3 months?
Not really, no. So let me tell you what we were thinking. So the test of gaining further confidence was our test for the first rate cut, right? And so we met that test in September, and therefore we take that test out. If you leave it in, then it's new forward guidance. It's brand new forward guidance. What do you mean by it? Are you requiring yet further? We have to say yes or no at every meeting whether we've made further progress. The point is we have gained confidence that we're on a sustainable path down to 2%. So that I would tell you is what that's really all about. It's not meant to send a signal. Neither of those is meant to send a further signal. And saying further progress, it becomes a test. We don't want to be. We don't think it's a good time to be doing a lot of forward guidance. There's a fair amount of uncertainty in what I've said. The path that we're on, we do know where the destination is, but we don't know the right pace, and we don't know exactly where the destination is. So the point is to find the right pace and the right destination as we go. And I think there's a fair amount of uncertainty about that. And you don't want to tie yourself up with guidance. You want to be able to make sensible decisions as you go.
Steve Leisman, CNBC. Mr. Chairman, you talked about higher rates, perhaps from an expectation of higher growth. You didn't talk about it in terms of expectations of higher deficits. Is that something you think might be behind the recent rise in interest rates? And are rising deficits a concern to you?
So we don't comment on fiscal policy. And again, I don't have a lot more to say on what's driving bond yields. In terms of policy changes, though, let me give you a sense of how this works in the ordinary case. Let's say Congress is considering a rewrite of the tax laws. Doesn't matter what's in the content. So we would follow that. At a certain point, we'd think we see the outlines. So we'd start to model it. And then we'd wait. And then at a certain point, the staff would brief
the FOMC and say, these are the likely effects. There's lots and lots of literature on the effects of tax policy changes on various parts of the economy. So we try to get smart on that, and then the law actually passes. And you'd start to put it. You probably run an alternative simulation before that happens, just to keep people trying to understand it. Then when it actually passes, it goes into the model, along with a million other things. So we have a very large economy. Many things are affecting it at any given time, and a law change of some kind would go in there, but it would it's a process that takes some time. Clearly, the legislative process takes a lot of time, and of course, the real question is not the effect of that law. It's all of the policy changes that are happening. What's the net effect? And the overall effect on the economy at any given time. So I think that's a process that takes a lot of time and that we go through all the time with every administration, constantly. And this will be no different. But right now there's nothing to model right now. It's such an early stage. We don't know what the policies are, and once we know what they are, we won't have a sense of when they'll be implemented or all those sorts of things. So I think I would just say we're not doing that now, and all that will take time, and it will be very much regular order when we do that.
If I could just follow up on Nick's question, are the current rates something you feel like you need to lean against, in that they go against the direction of policy by adding restriction to the economy, or do you just take them as a given and perhaps a signal that you should do less?
I just think the first question is, how long will they be sustained? If you remember the 5% 10-year, people were drawing were massively important conclusions, only to find, 3 weeks later, the 10-year was 50 basis points lower. So, it's material changes in financial conditions that last, that are persistent, that really matter. And we don't know that about these. What we've seen so far, we're watching it, we're reading, we're doing the decompositions and reading others, but right now, it's not a major factor in how we're thinking about things.
Chris.
Thank you, Chris Rugaber at Associated Press. You mentioned the positive economic data that we've seen since the September meeting, including the revisions to things like savings, higher GDP growth. We saw stock market jump yesterday. That's renewed some of the questions about why do many cuts at all in this with this backdrop.
So you're right. As I mentioned, and as you mentioned, the latest economic data have been strong, and that's, of course, a great thing and highly welcome. But, of course, our mandate is maximum employment and price stability. And we think that even with today's cut, policy is still restrictive. We understand it's not possible to say precisely how restrictive, but we feel that it is still restrictive. And if you look at our goal variables, the labor market has cooled a great deal from its overheated state of 2 years ago and is now essentially in balance. It is continuing to cool, albeit at a modest rate. And we don't need further cooling, we don't think, to achieve our inflation mandate. So that's the labor market. Inflation has moved down a great deal from its highs of 2 years ago. And
I'm feeling bullish.
Like I mentioned, that it's on a sustainable path back to 2%. So the job's not done on inflation. But if you look at those two things, we judged in September that it was appropriate to begin to recalibrate our policy stance to reflect this progress. And today's decision is really another step in that process. Overall, as I mentioned, we believe that with an appropriate recalibration of our policy stance, we can maintain strength in the labor market, even as our policy stance enables further progress toward our inflation goal.
Bitcoin holding at
Great. And just to follow up,
76.4.
What might cause you to pause rate cuts in December? What kind of economic data would lead you to that path? Thank you.
So we haven't, made any decision like that at all. But we're in the process, as I mentioned, of moving policy down, our stance down over time to more neutral level. And as a general matter, as we move ahead, we are prepared to adjust our assessments of the appropriate pace and destination as the outlook evolves. So, for example, if we were to see the labor market deteriorating, we'd be prepared to move more quickly. Alternatively, as we approach levels that are plausibly neutral or close to neutral, it may turn out to be appropriate to slow the pace at which we're dialing back restriction. Again, haven't made any decisions about that, but that's certainly a possibility. If you can think of it as similar to what we do with asset purchase, with asset runoff, with QT. So we reach a point where we slow the pace, much like an airplane reaching the airport slows down. And so we're thinking about it that way, but it's something that we're just beginning to think about.
Edward.
Thanks, Chair Powell. With the noise in the jobs reports that we've seen, and you look at the Fed's favorite inflation, PCE inflation, overall it's 2.1%, very close to the Fed's target, but core inflation is 2.7%, and it's been that way since July. So why doesn't this data give fuel to a rate pause for this meeting?
Well, so I think if you look at the 3 and 6 month, you're quoting the 12-month. So we look at all of them, right? But if you look at 3 and 6 month core PCE, you'll see they're around 2.3%. So we look at all of them, and we look at 12 as well. But what it's telling us is that we really have made significant progress, and we expect there to be bumps. For example, the last 3 months of last year, the core PCE readings were very, very low, probably unsustainably low. So that's why forecasts generally see a couple of upticks toward the end of the year. On the other hand, the January reading certainly looks like an example of residual seasonality, so that we saw last year. So when that falls out of the 12-month calculation in February, we should see a thing down. So it'll literally be a bump up and then down. We understand that. Overall, you see the progress on inflation, and you also look at the economy and you say, what is the inflation story now? Where's it coming from? So I point to a couple of things. One is the non-housing services and goods, which together make up 80% of the core PCE index, are back to the levels they were at the last time we had sustained 2% inflation, which happens to be in the early 2000s for a period of 5, 6, 7 years. So they're back to that level. What's not is housing services. So let's talk about housing services. Housing services is higher. What's going on there is, market rents, newly signed leases are experiencing very low inflation. And what's happening is older, leases that are turning over are taking several years to catch up to where market leases are, market rent leases are. So that's just a catch-up problem. It's not really reflecting current inflationary pressures. It's reflecting past inflationary pressures. So that's one thing. The other thing is, I'd say look at the labor market, not a source of inflationary pressures. Where's it coming from? It's not a very tight economy. What is the story about inflation? You see that catch-up inflation also in insurance and several other areas. So you're seeing. We're not declaring victory, obviously, but we feel like the story is very consistent with inflation continuing to come down on a bumpy path over the next couple of years and settling around 2%. That story is intact, and it won't be 1 or 2 really good data months or bad data months aren't going to really change the pattern at this point now that we're this far into the process.
So you're quickly trying to get to that neutral rate that you see, or do you foresee that you have some time to get there?
Nothing in the economic data suggests that the committee has any need to be in a hurry to get there. We are seeing strong economic activity. We are seeing ongoing strength in the labor market. We're watching that carefully, but we do see maintaining strength there. And so we think that the right way to find neutral, if you will, is carefully, patiently.
0.25% cuts.
That's not meant to have a specific meaning, other than to the extent the economy remains strong, we have the ability to take advantage of that as we try to navigate that middle path between the two risks.
Which is like 0.25% rate cuts. He's saying no 0.5% rate cuts.
Hi, Chair Powell. Craig Torres from Bloomberg.
This is bullish.
Today, did you learn anything about what Americans think about the economy from the election results? First question. Second question. I want to talk about some labor market indicators, and I do so with
he's not going to answer that first question.
Attentiveness to the maximum employment side of the mandate, Chair Powell. So the unemployment rate has been at 4% or higher for 6 months. One of the broadest measures of unemployment is up about 0.5 point from a year ago. Compensation gains are sliding back. The quits rate, a signal of labor market dynamism, has been heading down to that bad neighborhood of the 20 teens. So you have put a marker at Jackson Hole saying any further cooling is unwelcome. It is cooling generally a little bit further. So at what point do we reach what you would describe as a shortfall from maximum employment? Thank you.
Sure. So on your first question, I'm not going to talk about anything that relates directly or indirectly to the election.
Of course he's not.
On the second one,
Pass.
This is the great question, and so one we think about all the time. So I'll just say a couple things.
That's funny.
There's nothing really surprising here. What we know is that the unemployment rate is low. We also know that it's moved up significantly from a year or so ago. So we've seen a big change upward in unemployment. Sometimes that has meant bad things. So far, it doesn't appear to be. It appears that I wouldn't say that the labor market has fully stabilized, because I do think it's continuing to very gradually cool, but it seems to be in a good place. And our policy, of course, is designed to keep it in that good place, to maintain the strength in the labor market while also enabling further progress on inflation. You mentioned a bunch of indicators, and you're right. The openings to unemployment rate is back to a normal level. I would characterize it more broadly as normalizing. You mentioned wages. Wages are still running just a bit above where they would need to be consistent with 2% inflation, unless productivity is going to remain at this high level. If we see productivity, more sustainably at these high levels, then that would sustain higher wage gains. So I would say, in fact, you can say it the other way, that wage increases are now consistent with 2% inflation given current productivity readings. But of course, the lore on productivity readings is whenever you see high readings, you should assume they're going to revert pretty quickly to the longer term trend. That has always been the case for 50 years. But it may be that we're now 5 years. If you look at the NIPA revisions that came out a month ago, we're 5 years into a nice set of productivity readings, which are sustained and very healthy. But overall, it's a good labor market. We could talk about 20 different data series. We'll be looking at all of them, of course. But we don't want the labor market to soften much from here. We don't think we need that to happen to get inflation back to 2%.
Victoria.
Hi, Victoria Guido with Politico. Some of the president-elect's advisors have suggested that you should resign. If he asked you to leave, would you go?
No.
Can you follow up on, do you think that legally you're not required to leave?
No.
Michael McKee from Bloomberg Radio and Television. You talk a lot about what the data are telling you and how you are dependent on the data. But in terms of forward-looking assessments of the economy, what are you hearing from CEOs or other officials around the country? What did you hear today from the regional bank presidents about what companies and consumers think about where the economy is going from here rather than looking backwards? And does that match up with what your forecasts have been and what you think the appropriate policy path should be?
So it's hard to characterize a really interesting set of discussions we had, and of course you'll see them in the minutes in 3 weeks. But I would say this: I think the comments from our Reserve Bank colleagues and from the CEOs that they talk to are pretty constructive on the economy right now. Pretty constructive, feeling that the labor market is back to normal, to the point where it's no longer that much a discussion topic in their worlds, whereas 2 years ago it was all they were talking about. So they feel like the labor market's in balance. People feel good about where the economy is. Demand is obviously pretty strong, and you're seeing 2.8% growth in the third quarter estimated. Maybe the year's 2.5%. This is a strong economy. It's actually remarkable how well the U.S. economy has been performing with strong growth, a strong labor market, inflation coming down. We're really performing better than any of our global peers, and I think that is reflected in what you hear from what I hear people hear from CEOs. I don't get to talk to a lot of CEOs in my job, but I hear what others summarize from those, and of course I hear the Reserve Bank presidents do a lot of that, and it's pretty constructive overall. Now, that's not to say there are areas of caution and things like that, but ultimately, overall, pretty positive.
To follow up the areas of caution, if there were black clouds on the horizon that you identified as something you're watching, what would they be?
I think it's things like clearly geopolitical risks around the world are elevated, and just as clearly they've had relatively little effect on the U.S. economy. Now, that can change through the price of oil or otherwise, but people talk about those as something that's on the horizon all the time. But ultimately, if you look at the U.S. economy, its performance has been very good, and that's what we hear from business people, and expectation that will continue. If anything, people feel next year. I've heard this from several people that next year could even be stronger than this year.
Andrew.
That's bullish in itself.
Hi, it's Andrew Ackerman with the Washington Post. I just wanted to follow up on the discussion earlier on fiscal policy.
We're about to take a new all-time high for
Predecessors
Bitcoin, guys.
Greenspan and Volcker spoke up
Again
loudly when they thought large budget deficits endangered economic or financial stability. Will you do that too? And right now we're in a period of full employment. We have large budget deficits and debt at historic highs that are rising. Is that something you'd speak out against?
So, I have said many times, no more, no less than what the predecessors you mentioned have said. And what that is that the U.S. federal government's fiscal policy is on an unsustainable path. The level of our debt relative to the economy is not unsustainable. The path is unsustainable. And we see that in, you've got a very large deficit you're at full employment, and that's expected to continue. So it's important that we, that to be dealt with. It is ultimately a threat to the economy. Now, I can say that I don't have oversight. We don't have oversight over fiscal policy. I've said it on many occasions, just said it again.
Okay, thank you. I guess the other question is to follow up on Victoria's question. Do you believe the president has the power to fire or demote you, and has the Fed determined the legality of a president demoting at will any of the other governors with leadership positions?
Not permitted under the law.
Not what?
Not permitted under the law.
Thank you.
Courtney.
He's feeling sassy.
Courtney Brown from Axios. In response to Howard's question, you said it wasn't an ideal time to give forward guidance because of the economic uncertainties. Can you lay out what some of those uncertainties are and whether or not it includes some of the proposals that the president-elect has put out on the campaign trail? Tariffs, for instance?
No, I was not referring to the new administration's policies at all, nor will I today. So what I'm just saying is, as we look ahead, we know, and I mentioned this in my statement, that the risks are two-sided. I guess I should start by saying that we think that the economy and we think our policy are both in a very good place, And but as you look forward, you say, what are the risks? And one risk is that we would move too quickly and find ourselves having moved too quickly, and inflation comes back, and we lost our chance to get inflation back to 2%. So we have to avoid that risk. And that to avoid that risk, that means you want to move carefully. The other risk is that we move too slowly, and that we allow the labor market to weaken too much and do unnecessary damage to the labor market and to people's working lives. That says don't get behind the curve. So these two things are the two risks that we have to manage. And so we're in the middle there. We try to be in the middle and deal with manage both of those. Again, the idea is to support the strength we have in the labor market and in the economy, but also with somewhat less restrictive but still restrictive policy, enable further progress toward our 2% inflation goal. This is a thing we're meeting by meeting, we're going to be making our assessment of what the right path is. It's not as important. The precise timing of these things is not as important as the overall arc of them. And the arc of them is to move from where we are now to a sense of a more neutral policy. We don't know exactly where that is. We only know it by its works. We're pretty sure it's below where we are now, But as we move further, there will be more uncertainty about where that is, and we're going to move carefully as this goes on, so that we can increase the chances that we will get it right.
Simon.
Thank you, Chair Powell. Simon Erminovich with The Economist. I know you don't want to share your decomposition of bond yields, but if you look at the break-evens, it is clear that longer-term inflation expectations do seem to have risen up at about 2.5%, for example, on the 5-year. That's up half a point from when you cut in September. Do you have any concern at all that longer-term inflation expectations are de-anchoring, or put another way, are anchoring at a slightly higher level? Thanks.
So we would be concerned if we thought we saw longer-term inflation expectations anchoring at a higher level. That's not what we're seeing. We're still seeing, between surveys and market readings, broadly consistent with. I looked at the 5-year earlier today, and it's probably moved, but it's just not. It's kind of right where it's been, and also it's pretty close to consistent with 2% PCE inflation. So that's one that's been a traditional one that we look at a lot. But overall, expectations seem to be, and really have throughout this, in a place that's consistent with 2% inflation. But you're right to say we watch that very carefully, and we will not allow inflation expectations to drift upward. But that's really why we reacted so sharply back in 2022 was to avoid that.
Kelly.
Hi, Chair Powell. Kelly O'Grady, CBS News. We just talked about what you've heard from business leaders on the economy, but many average Americans are still not feeling the strength of the economy in their wallets. So what's your message to them on when they might expect relief?
So you're right that we say the economy is performing well, and it is, but we also know that people are still feeling the effects of high prices, for example. And the world went through a global inflation shock, and inflation went up everywhere, and it stays with you because the price level doesn't come back down. So what that takes is it takes some years of real wage gains for people to feel better. And that's what we're trying to create. And I think we're well on the road to creating that. Inflation has come way down. The economy is still strong here. Wages are moving up, but at a sustainable level. So it's just, I think what needs to happen is happening, and for the most part has happened. But it'll be some time before people, regain their confidence and feel that. And we don't tell people how to feel about the economy. We completely respect what they're feeling. Those feelings are true. They're accurate. We don't question them. We respect them.
And just a quick follow-up, President-elect Trump has been critical of your performance. Any concern about his influence on the Fed's independence?
No.
I'm not going to get into any of the political things here today, but thank you.
Hi, Chair Powell. Nancy Marshall-Genzer with Marketplace. What is your plan if we start to see stagflation?
So that's the whole plan is not to have stagflation, so we don't have to deal with it. So that is actually our plan. It's of course a very difficult thing because anything you do with interest rates will hurt one side or the other, either the inflation mandate or the employment mandate. I would just say that we've been able to see inflation come down a whole lot, much closer to our goal, without the kind of sharp increase in unemployment that has often accompanied programs of disinflation. So, knock on wood, we've gotten this far without seeing a real weakening in the labor market, and we believe we can complete the inflation task while also keeping the labor market strong, and that, of course, is exactly what we're trying to do.
Can you rule out an interest rate hike next year?
No, I wouldn't rule anything out or in that far away, but that's certainly not our plan. I mean, our baseline expectation is that we'll continue to move gradually down towards neutral, that the economy will continue to grow at a healthy clip, and that the labor market will remain strong. If you look at our that will not change from the September SEP. That is our baseline forecast, and short of some exogenous event, that will continue to be our forecast for the foreseeable future. So.
but ultimately, we're not in a war where we can afford to rule things out a full year in advance. There's just too much uncertainty in what we do.
That comment might put us to new highs.
Last question.
Here we go.
Jean Young with MNI Market News. I wanted to go back to a comment that you had made about Americans being quite unhappy about the cumulative price level rises over the past few years, even though now inflation is back on a path to 2%. Would it be appropriate for the Fed to undershoot for a while on its inflation goal under the average inflation targeting regime, so people have a chance to catch up?
No, that's not the way our framework works. We're aiming for inflation at 2%. We did not think it would be appropriate to deliberately undershoot. And part of the problem there is that low inflation can be a problem too, in a way. But that's not part of our framework, and it's not something we're going to be looking at in our framework. Thank you very much.
Well, there you have it, my friends. It is looking pretty darn good here. Hold up. Gotta get the audio situation sorted out here. Guys, that was a very, very entertaining. Are you not entertained? You know what I mean? Guys, that was extremely entertaining. There was so many fun questions there where I saw a little sass out of Fed Chair Jerome Powell. He was seeming a little zesty, don't you think, guys? I want to cover a couple of the things here that we're seeing with this. And so if you want to stick around, guys. I want to talk a little bit about some of the things that we're seeing here. You got a lot of people that are very bullish in the chats. I sit very bullish with all of this as well. I think that was a very interesting press conference there. So hold up here. Let's get into this. I'm going to share the screen again. We will share the entire screen this time and go through some of the things. Now let's go right to Bitcoin, which did get very close to 77K. Notice there was one question there at the very end, guys, where we did see Fed Chair Jerome Powell get asked, what he's going to do for this next, are we going to cut the rates in 2025? And he said, well, I think that we're going to continue to lower until we get to our target. And so he basically said, yes. He said right now they're on track. They've got a lot of wiggle room. They feel good. They feel like they can keep going. With the language he was using, it seemed like he's saying, we're not going to have a 0.5% rate cut. So get that out of your mind. But I want to keep going with 0.25% rate cuts. And so right now you're on the 5-minute candles for Bitcoin. I think we're seeing the markets price that in. I think we could be seeing a 77K price here in a matter of minutes, potentially. We'll see. We're closing a 5-minute candle here. Let's see what our next one does. But this was very, very interesting, guys. This was very, very, very interesting, actually. I'm going to now keep an eye on this Bitcoin price, but I do want to talk about some of the things. One of the things is we did have an inflation report come in a little higher than expected. And so before we get overly bullish, that's something that happened. But overall, he's still feeling good about economic activity. So this doesn't really make us bearish in any capacity. Some of the things for, here you've got some people that are saying this is a perfect point for the Fed to pause. This is a little bit more dovish. But what is the data suggesting? Right now, we've got a 66% chance that we're going to have another Fed rate cut in December. And that's kind of the language that he was using as a possibility. So looking at December, the odds are coming in still at 66% chance that we're going to get another 0.25% rate cut. The more rate cuts we get, the more that we can see our risk on assets like Bitcoin and then specifically altcoins start to rally, which might be why we're seeing Moodang go back to the moon right now, and all these other memes out there. Looking at CoinMarketCap right now, we got a lot of things pumping today. So a lot is pumping right now. Over the last hour, are we seeing more green or red? We're actually seeing a mix. And so the markets are still kind of trying to figure out what we're going to price this in with in terms of, where we're going next. But I do want to show you guys the price of Bitcoin here. We did just get, we didn't get 77, did we? We got very close. We had a little flicker here up to 76.8. I think we're going to be seeing 77. I think we're continuing to the upside. One thing that I've been looking at for Bitcoin specifically, and I'll talk more about some of the comments made during this press conference. One thing I was looking at specifically for Bitcoin here, if you just look at this chart I had, we kind of had this wedge pattern playing out. And I'm going to go down to the hourlies. Sorry, guys, I'm flipping around here. I'm going to go down to the hourlies here. This wedge right here, if you measure the breakout from this wedge, it should hypothetically bring us up to 78K. So if there's a target for today I'm looking at, I think 78K is reasonable. But with this news that we just had today, I wouldn't be surprised if we're just flying higher. The crazy thing is we do have Bitcoin dominance slipping down. It seems like maybe we topped out at about 60%, maybe. So we'll keep an eye on this. Again, these rate cuts mean that risk on assets can go up, which is why we're seeing the total market cap for crypto continue to climb, actually. So if I go down to the hourly candle here and I go ahead and I auto fit the data to the screen, we are getting green candles on the total market cap. Playing out exactly as we talked about. We broke out of this range that we were stuck in for 250 days, and we got a bounce kind of off the top of that range, and now here we're moving to new highs, and I think that the total market cap is going to be breaking to new highs sooner rather than later. I'm feeling very, very good about this, guys, and I think, so is the market. Here we go, guys. We're looking at potentially maybe a 77K Bitcoin right now, live on stream. This is awesome. You got to love it, guys. You gotta love this. Here we go. Here we go. We are getting the rally right now, folks. 76.89, 76.9. Here we go. Here we go. 76.95. We might see it right now, guys. That was a very, very bullish press conference, guys. There was a lot of questions about the new president, and some people. Okay, so clearly there's a feud between the new president that's coming up here and Fed. If you're not aware of that, well, there's definitely some quarrel between those two. Right now the president-elect is, he's made a lot of comments hating Fed Chair Jerome Powell in the past and accusing him of playing political games. Fed Chair is clearly salty to that. If you've seen some of the ways that he responded to that, some people said, if the president-elect says, hey, you should step down, would you? He says no. And then they're like, come again. He's like, no. Is there any way where the president-elect could get you to step down? He says, legally not possible. And somebody else come again. And he's like, legally not possible. Very sassy, very sassy. And you know what I'll tell you, really going to be interesting to see how that shakes out. Is there a problem that they've got an ongoing quarrel? I don't know. I don't know if there's like a problem with that, if that's, a conflict of interests. I don't know. We're going to see how that plays out. But I will tell you overall, this was very bullish. There was a direct question asked about Fed rate cuts continuing. The data is suggesting we're going to get more Fed rate cuts. 0.25% is awesome. 360 Odyssey is asking me, hey, Kip, has your crow price target changed with the recent news? No, $2 to $5 still. That's the same target. That, if anything, that's the catalyst that's going to make it go there. The recent news you saw about crypto.com. And so that's just how I feel about it. We might see a 77K Bitcoin on this 5-minute candle right here. I would love to see that 77K move. If we break through 77, I think we can head a lot higher very, very quickly, potentially. So this is very exciting. This is a great day. It's a great day. Total market cap still climbing. You should feel very good right now, guys. Looking at some other things here. You've got Solana getting very close to $200. We were up to at 1.2, 10 back in March when Bitcoin was at its highs. Solana is getting ready for price discovery mode. Sassy there. No. We just hit 77. I guess I missed it. Did we hit 77? We got close. We didn't hit 77. Maybe we hit 77 on crypto.com or something, but we did not hit 77 yet, but we're probably going to do it. If you just saw it maybe on another exchange, I think we are going to see the 77 here in like just a second. So we're right here on these 5-minute candles, 76.931, 76.940, and give me 77. Come on. Let's see some 77 here. Up there. Oh man, that was close. That was close. How high can we go? How fast can we go? And how high can we go? Wow. What a day. Thank you. By the way, we will be doing all of our content on YouTube and on X moving forward. Our shorts, our long form videos, our live streams. So if you guys like this kind of content and you enjoyed yourself today during the stream and you felt like this is a good place to be, well, welcome, guys. Welcome. And, follow us and subscribe and retweet it out and let people know that this is what we're doing. We are coming out with content every single day for you guys. We're looking forward to Bitcoin having this parabolic rally, guys. In terms of targets, I was just talking about mine. It's like 78K for the day would be reasonable, just given kind of what we've seen here. With this news here about the Fed. Now we've got a new bullish president. Now we've got a lot of things going on. And we're getting the 77K Bitcoin. Oh, man. There are some games going on here at 77. We want to get there, but also some people don't want us to get there. Look at this. Look at the volatility today. This is bullish, guys. Honestly, there was a lack of volatility, if anything, with this FOMC meeting. Typically, we see a lot more aggressive moves. I mean, here's a couple, right? Here's a couple aggressive moves, but this is nothing compared to what we've seen really historically for an FOMC meeting day. It's probably just because, in my opinion, it's probably just because of this. Actually, let me zoom out even more. Let's go to the weekly time frame. Let's get rid of all the technicals. And let's just go auto fits data to screen. Here's the truth, guys. We're in price discovery mode. So you could have a $10,000 daily candle for Bitcoin. I mean, this is the reality of where we're at now. We've got institutions FOMOing in. We've got the United States government that could very possibly do a Bitcoin strategic reserve very soon. I mean, this could be happening. If the US government starts doing a strategic reserve for Bitcoin, what do you think that China and India and Russia and all these other countries are going to do? They're probably going to do the same. We're in a parabolic bull market rally. This is the moment that we have all been waiting for. Ladies and gentlemen, are you ready to rumble? I am. I'm ready to rumble. I think it's time. Let me go to the 5-minute candles. Somebody's saying 77K. Where are you seeing 77? I'm not seeing 77 yet. We got really close. We got really, really close, guys. Crypto Runner says my last Bitcoin buy was at 64K. That's a big discount from where we're at today. That's for sure. That's for sure. Guys, this is great. What a great day. So anyway, I mean, yes, we did put in a new high. I think, right? This is the new high. Yeah, we're literally at all-time highs for Bitcoin right now. So I guess I don't need 77. We're literally putting in new all-time highs for Bitcoin. What am I should be talking about that. Bitcoin is at all-time highs. Literally right now, we are in true price discovery mode. We just had an FOMC meeting where the Fed was actually quite bullish, in my opinion, quite dovish, quite bullish. You should feel good. I should feel good. I do feel good. I do feel good. We're ripping. We're roaring. We're soaring. Let's see what else we got here. Cue the music. You want some tunes? I don't have the tunes right now. I don't have tunes. It's a bummer. It's a bummer. I wish I did. I could give you these tunes. Kind of lame, though. These tunes are kind of lame. But I guess better than nothing. Yeah, I got to get some, like, real tunes in here. Man, oh man, look at this. Whale games. Anyway, guys, there's a chance we're going to be playing around here now for a minute. Congratulations. We found another new all-time high. You should feel good. Follow us at the Crypto Report. Subscribe to our YouTube channel. If you want to trade some of this volatility in crypto, you can sign up for Blowfin using our affiliate link. It's on our YouTube channel. Check it out if you haven't done so. 5 videos every day. We're going to be posting on Twitter and on YouTube moving forward for all our content. So check it out, guys. That's all I got on this one. I'm Crypto Kip. This is the Crypto Report. Thanks for watching the FOMC meeting with me today. I appreciate each and every single one of you guys. Let's keep going. Let's keep pumping. Until next time, y'all. Peace. DCA HODL. Do your own research. Nothing's financial advice. You know that story by now, guys. I love ya. Let's have a bull market, fam. Peace.